Okay, welcome everyone. Welcome to the live stream. It's been a couple weeks since I've done a live stream. Why don't you guys let me know if my audio is okay? Just leave me a thumbs up or leave a comment, something that lets me know the audio is all right before we get started. And we'll start digging into, everyone's picks, what charts you want me to look at, and maybe some individual trade ideas. We'll get started here in just a couple minutes. Give people a second to kind of come in. Can you guys hear me okay? Let me know if my audio is all right. Perfect. Great. Okay, then let's go ahead and get started. I'll go for, 45 minutes or so, or just depending when we run out of good picks or things to look at. I'm going to start out with Schwab. We'll start out with the top. I've got that on my list. Now my trading view seems to be lagging a little bit. My trend lines, I don't know. I think it's their servers, but it's taken a second for my trend lines to show up after I click on a stock like that. So bear with me on that one. Schwab. Okay, so I'd been tracking Schwab. Really, the bigger pattern that I see on Schwab is still lower prices. Really coming off of the October-November timeframe that's the financials upward trend line. That's when they really started an upward trend line. When that value trade, kind of a value trade started, inflation trade, value trade started getting it underway. And so there's Schwab's uptrend line. We've been making a series of lower, I've got them all circled here, but these are all kind of lower lows and lower highs. Recently, though, they did break above right there and made a new, kind of a new high. Pretty impulsive spike. Didn't make a new high over this high right here. So it's not a divergent high. A divergent high would have been a high just, up in this area, making a new high while keeping the momentum downtrending. We didn't get that. So looking at that one, if I look at the hourly chart, we had this kind of this ramp here. And what I was looking for is a break of the ramp. It did break. It drifted sideways, and now it started to trend downward. Thoughts on this one? I still think we're going to head down to this support level here at 62.10. But what I would use also would be the XLF as probably an indication. So let's look at that real quick. Just give me a second for the trend lines to show up. They're just lagging behind a little bit. Okay, so not sure where my trend lines are, but trading view is lagging behind. We'll need to draw that out. So XLF, coming off your March 2020 lows, but really it's really that coming off your November timeframe. And you've got an uptrend, you have negative divergence. Haven't broken trend completely on the XLF, at least on this one. I'm not sure what other trend lines I've had on this in the past, but clearly, there's a breakdown right there. That's a trend line as well, and we did break right there. We'll have to come back to this one because my trend lines that I've had in the past, there they go. They're just taking forever. Yeah, there's the trend line that I had in the past right there. So we broke. We're kind of drifting sideways. We could make this secondary trend line right here, and you can see we held support there. So we need to see that one go. As far as I can tell, it's probably going to just flag and then break. You'll want to see that one break for the next sell signal. So the financials likely aren't going to head down until we break this trend line on XLF. And then if we do break, I'd see the level of support. I've got it kind of circled down here. This is probably your final target, about 31.62. 30 depends on when we hit it, right? But somewhere right around that 31.50, 32 area looks to be the final level of support. So we've got the secondary trend line. It's right here, right there, and you can see. So we need to see that go for the next leg lower, and likely Schwab's going to play along with that as well. Sorry for the trend line delay. It's trading view has just been slow for some reason. Okay, AMD. Yeah, I'm short that one. Not a huge short position. I have kind of a starting short, but what I like about the short trade on this is this big trend line on AMD that's been in place since 2016. Again, if you can't mimic this trend line, make sure you're using log scaling on TradingView or whatever platform you're using. Log scaling. See it down there? And you can see clear uptrend line on AMD on the daily chart. And then up at the high, we broke trend right here. So the bullish trend has been broken, and we've just been doing a series of back tests ever since. Back test 1, back test 2, back test 3. Good bull trap right there. It recovered the trend line, and I was looking for that bull trap or that fake out, and then it's since broken back down, back below that trend line. So that's a bull trap. I've got it circled. And again, the reason why I was looking for this as a bull trap and not a recovery of that trend line support is the fact that we had negative divergence in play. So when you have negative divergence on it, breakouts, you have a higher probability of failing. No guarantees, but definitely the probability is elevated that you're going to fail. And that's what we saw here. So we failed back below resistance, and we've been downtrending ever since. You can see we're just making, if I kind of get rid of this area, you can see we're making a series of down, waves down. I think that's going to continue. And where I would be looking for, I still have this target right here at 58.88. That's that thin zone. If you're not familiar with what a thin zone is, look at this range up here in purple. See all the trading where we just went back and forth, and lots of trading in this area over a longer period of time. This range right here from 58.88 up to 74, there's no trading. It just shot right through it, just a couple days gapping up and moved right through it. So that's a thin zone. So what happens is if you break this level right here at 73.54, let me zoom in. If we break this level right there, that's going to be support. I've got it kind of marked out, but it's right there. And if you break into that level, then all these people, all the trades that took place all through here are going to start to lose money. They're going to be underwater. And so what they do is they start to cover, or, they start to exit their trades. They start to, stop losses are hit. And what that does is creates a pretty swift wave of selling to bring us right down to this level of support at 58, 80, 59, right in there. So that's what I'm looking for on this one. I still think that's what's going to happen. It looks like we're going to move down, probably bounce here, maybe get something like that, chop around, break, and then head down there. And that's where I'm looking to cover the short trade, is down into this area. Okay, if anything changes, I'll keep an eye out. This wave up right here, if anybody that's been following me for a while, they know that I covered my short trade on AMD right here. And we had bullish divergence. See it marked out? So we made a equal low right there from this low. So we had this low, then we made this low, and it was on higher momentum right there. So that's bullish divergence, and that was telling us that we're likely going to see a wave up, and they're pretty impulsive wave up there. So we've gone full circle, and now we've just extended the bigger pattern negative divergence, and tells me we're heading lower from here. All right, moving on. why do I take into account wicks when looking for divergences? So when I'm drawing trend lines, the trend line analysis is really based on the most reactions. I'm looking for the most tags of a trend line. You know, you need at least 3, but the more the better to draw a trend line. And then the divergences, although maybe based on closing, divergences just tell us of a condition. So separate divergences from the trend line. Divergences give us a condition in the markets, telling us that markets have a higher probability of going down or going up. And that whether that's based on the closing or not, it doesn't matter. We read the divergences as a condition, and then we use, not when we have a condition that's set up for the probability of a trade to go one way or the other, then we look separately for the trend line, the breaks of trend line support or resistance. So use the divergences to give you kind of a setup. Then you use the trend lines to give you, breaks of support or resistance. And then you take the trade. And then we manage risk. Okay, so position sizing is important. And then also evaluating the risk-reward ratio. So like on this one, I'll give you an example. So if you shorted this one, let's say you shorted back on the break back below that support, which is where I reshorted it right here on the 9th. And then my target is going to be, let's say you want to target just this one, this trend line support right here at 73.50. So your potential reward would be about a 30% gain. And where would you want to stop out on this if you're wrong? Well, I think if you recover back above this trend line right there, excuse me, I had to sneeze. If you recovered back above the trend line right here, then you'd probably want to stop out, and that would be like a 10 to 11% loss. And so that's a 3-to-1 risk-reward ratio. That's a favorable trade. And so those are the kind of trades you want to take when you have the potential to make more than you have to lose. And, that's how you manage risk when you take a trade. But again, the condition of a trade is starts with the divergences, and then you look for trend line analysis and the breaks. So that's how that works. They're not they don't go side by side. It's one then the other. Docusign. All right. Okay. This is kind of interesting. I haven't looked at this chart for a while. What I'm seeing right now is here's your former high at 289.70. We broke above that for a period, but we've closed back below it. And we're back below that resistance level or that former high. You can see we kind of held resistance right there. Finally broke out, tagged it as support, bounced, but failed, and we're back below it. So that's a bull trap as of right now. What I would look for, and also that was a divergent high. So you'll see here that you had that high price right there, and it was actually, sorry, I take that back. Not a complete divergent high, because you did have, this was your high, this was your divergent high, but we made a new high and actually on higher momentum on the PPO. The RSI, it actually was a divergent high, because you can see right there we made a kind of an equal high. So mixed signals on that one. What I would probably look for if you wanted to trade this is likely going to come down and hit this 264, this trend line right here. Maybe it bounces there. A break of that would be bearish, and that would mean we're likely hitting all the way down to the bottom of this range right there at 185.36. But I wouldn't want to anticipate that until I saw a break of, probably this minor uptrend line right there. But on this one, you can see we've had this big sideways range right here for a while. We broke up to the upside and have since kind of failed. So potential for more downside on that one. So Baba, Pradeep, thank you. Appreciate that. I do. Let me get to yours actually real quick. We'll look here at, oh, okay. So you want the long bond. So the long bond had bullish divergence right there on the RSI. Not so much on the PPO. Let me look. Well, you could say it was, you know, kind of an equal low. So yeah, it's there. Because you made a, you know, here's your former low right in there, and then you made a new lower low, and then we had positive trending momentum, kind of equal trending on the PPO. So that was your bullish divergence. We also had this downtrend line right there on TLT, and we broke to the upside. So there's your breakout or your buy signal. It really kind of a fake out move, but basically happened right there. We've been uptrending ever since. Resistance I see is right about there. That's good resistance right there at 154.42 area. You can see all the tags: support, 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 and then a break with a gap down, break of support, resistance, and likely we're going to hit that. Excuse me. So we're probably going to hit that. I would say that's the target, and probably the upside that, you know, that we're going to get on this before maybe coming down. Who knows? You know, I don't know what it'll look like if or when we're up there. We'll have to analyze that. But as of right now, it looks like we're going to head up there. And that might be congruent with a market correction. You know, maybe we find, maybe we get a little bit of a market correction, and then we get, you know, some bond bid in the bonds. I'm not sure. All right, let me go through and look. Car. All right, so this one, I actually was thinking about reshorting this thing on Friday. It didn't look super impulsive, but here's the thing on car. Here's your uptrend line. So there's your bullish trend. This is where you want to be long and buying at support, you know, riding that trend up. Up near the highs, we had negative divergence, broke trend, and they've been doing back tests ever since. Back test 1. Didn't get there on this attempt here. And if I look at the hourly chart, you can see we made this uptrend and then we broke. So I think we're likely heading lower now in car. And that's what I'd be looking for. Probably heading down to the 62.72 area as the next level of support. So maybe something like that. There'll be bounces along the way, but I would look for that. Just takes time, you know. It's very similar to some of these. Like, look at Zillow, right? So I talked about Zillow in the past months, and you know, gave kind of head and shoulders and everything, and you can see it takes time, but it's been making a series of lower lows. It's completely downtrending, and that's what car I think is going to look like over the next few months. Downtrends don't often start with crashes. They're not going to just completely plunge and then, you know, it's not how it starts. Typically, when you start a downtrend, there's a lot of disbelief, and there's a lot of dip buyers in this market, and they've been trained to buy the dip for the last 10 years. So you're going to have, you know, you're going to work your way lower, and then likely you crash at the end, you know, maybe something like that. Who knows? But usually the impulsive moves down, they take place towards the end of the down move and not in the beginning. Sometimes you'll have an impulsive down move in the very beginning, and then it'll level out, you know, and then it'll crash towards the end. And so BABA, I do not like BABA, but maybe we'll see. You know, here's the thing about BABA. I was looking at that on the daily chart. There is 2015. So there's your uptrend line in BABA. That's your bull market. And you can see here, you know, I talked about BABA, I believe, back in this time frame on one of my videos, saying I think we might have just seen the high in BABA for the bull market, and so far that's been true. It's clearly in a bear market. Now, this move down, this is impulsive. And so again, this is the kind of move that you would see at the end of a downward move. But from the high to where it's at now, this thing's fallen 50%. So probably we need to probably start looking for a bounce, I would think, here pretty soon. I do not see any bullish divergence on the daily chart. You know, we still have negative we don't have negative divergence. We have negative momentum, negative price action. Let's look at the hourly. So there is some bullish divergence starting to form on the hourly. You can see it right there. See how we're making kind of a higher low in the RSI, and yet that's on a lower price. So there's some bullish divergence, and there the PPO has that, you know, right there. So what I'd look for as a buy signal is the trend line on the hourly chart. You're going to want to look for a break, an impulsive break to the upside. And if we get it, then, you know, we'll have to look at some targets there. But I could see us having a bear market rally pretty soon. So I'd be on the watch for that. If you're short, you know, tighten your stops is what I would do. And if you're looking to go long, again, I'd look for a break to the upside of that downtrend. Okay. AMG. Yeah, I'm still short that one. That one's still looking okay. You can see here. So here's AMG. And again, if you guys are taking the trades that I'm pointing out, you know, again, just remember, everything here is just my opinion. You know, I can't help you manage your trade. I can't help you manage your emotions, you know, your position sizing, any of that. All I can do is point out trade ideas and let you know what I think. So here is AMG uptrend line right there. We had negative divergence here at the highs. We had a clear sell signal right there. Then you had a counter trend rally, kind of wash out. You know, that's designed, likely that's designed by the market makers as a way for them to get short or exit their bigger long-term positions and wash out any short traders that took that sell signal, and then you break to the downside. Little counter trend bounce, but yeah, as far as I can tell, we're going to start to do this. You know. Final target on that still stands at about 118.52 for right now. Oh, this is the wrong tool. Yeah, right in there for the final target. So I'm still short this thing, and it's profitable. You know, I took the trade on the gap down as it was selling down that day, and so I'm slightly profitable. Not much, but a couple percent. Okay. AA. Yeah, that one is a setup. I'm watching that one for next week. So there it is. Up, you know, you have an upward price channel. You have negative divergence that's been building for quite some time. It's confirmed as well. See this right here. See how we just made a new higher high in price, and yet the PPO made a lower high and has already started to turn down. Same with the RSI. So that's another confirmation of negative divergence. We're waiting for this break of trendline support right there. Once you get it, you're probably going to make a pretty swift move down to 31.72, and that's where you'll likely get a bounce. So maybe it'll look something like, maybe they'll grind it up and then break, hit that, run up, run a back test, and then start to sell down over time. Okay, so that's a setup. Looking to get short once we get a break of that trend line support right there. But we don't have it yet, so no trade. Morgan Stanley. Okay, let me look at that one. So this is what I have from the past. Yeah. Okay, so that's what I got. You know, I had that trend line already drawn out, and then I just extended it, and you can see that that's exactly where it ran up to for a full back test right there. That back test was a divergent high. We're just extending that negative divergence. So we made a new higher high in price and a lower high in the momentum from the former high. So that's that is the area you'd want to short right there. You know, if I didn't short this one, I didn't see it, but if I was going to short something, this is an objective short area right in here. And if you did short that divergent high, you would have been profitable now by, you know, 4%, 5%. This one is, let's see if we can draw a secondary trendline support. Yeah, I can't really draw it out. So maybe it's something like that. I think we're going lower in Morgan Stanley, at least in the near term. There's some support right here. Right there. See that? Resistance, support, 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 and then you run. So if we're going to correct, I like that as the target. 76.50. And if you're shorting this thing, you want to cover a little bit ahead. You don't wait for the last penny. You know, you want to cover a little bit above that support. But I like that as a target, 76.50. Okay. Moving on. What's LAC? Lithium. There's a breakout. With bullish divergence that was building back here. So there's your breakout. I'd be bullish this one, and I'd want to be buying on tags of this trend line with a stop somewhere below. That's how I'd do it. And I'd look for the all-time highs as, you know, a target and probably beyond. HMY. That's Harmony. So I've been buying this one. I'm underwater on it slightly, but I've talked about that in the past. I was buying it back here in the buy zone. It was up about 30% or so. It's not a huge position for me. And for me, I'm looking a little bit more for a longer term trade on this one. But again, I've been buying down here at support, and then I'll buy some more if I can get tags of this trend line right there down around 328 or so. And looking for this to move higher. It has bullish divergence. You can see it right there. I've got it marked out on the RSI, and there it is on the PPO. So we're making higher lows in momentum and lower lows in price, telling me we're likely going to turn pretty soon and change trend to the upside. Okay, Ally Bank. That is... that one's been doing this broadening wedge pattern from what I can tell. So there it is. There's your broadening wedge. Those often are topping patterns, or broadening wedges are can be a pattern that can tell you that you're about to change trend. And you can see here, clean uptrend line. We had a sell signal creating this broadening wedge. I would be looking to short this thing at the tags of the wedge. Maybe it wants to run up and make another high, a new divergent high. I don't quite know. So at this, where we're at right now is not, I wouldn't want to take a position right here. If you're short, I would just stay short. And then if you're not short, I would want to short at tags of this broadening wedge. We had some support right there at about 51.14. You know, I think we're probably heading down to the bottom of the wedge now. So I would look for a move down like that. Probably hit this support line at 43.26. Get a bounce right there. But yeah, I'd look for more downside in this one. We did have bullish divergence on the daily right there. See it? So this was a divergent low. So that bullish divergence, you know, set us up for that move higher. But I think that's likely played out now. And we're, you know, I don't know. I wouldn't want to take a position right here. Let's just put it that way. If you run up and make a new high or tag that broadening wedge, then I would want to short it up there. Okay, let's see here. Snow. That one's pretty new. Ooh, that's a big breakdown candle, isn't it? Let's look at this one. Although it is a doji. Right before earnings. Interesting. So there's your uptrend line in snow. It did break down. I don't know if there was a news-related event on that one. So that is a breakdown. It looks like earnings are coming out next week. And so what I would look for, let's see what the divergences are telling us. There's your bullish divergence right there. So that was your divergent low, telling you were going to get a trend reversal, and you did. We don't really have negative divergence on the PPO, but we do have it on the RSI. So if earnings come out and it's positive, they'll probably try to run a back test of the trend line, and that's where I'd want to short it right there. I'd want to go short on this one if I had to pick a direction, but only on a back test of that trend line. I wouldn't want to short it right here. Hey guys, leave me a thumbs up if you haven't done so. I do appreciate that. It helps the channel. AMD cup and handle. Let's look. No. That's not a cup and handle. Cup and handle would be something like you want to have an equal high, and then you make the handle, which can retrace to about 50% of the cup, and then you look for the breakout. this would be your cup. But it's gone way above. It's not a cup and handle. And, you know, cup and handles typically come at the bottom of a downtrend. It's a consolidation pattern. So I'll show you a cup and handle. Gold. And if you look at the daily chart, you know, this is more of a cup and handle, where you have you had a big bull market, then you had a big bear market. And this is the accumulation period where everybody's accumulating. And then you break to the upside, make the handle, and then, you know, you're looking for the next leg higher. Okay. All right, UUU, that is uranium, right? What is that one? Is UUUU a uranium stock? Not so sure. So right off the bat, you've got big negative divergence. See it right there? So we're basically divergent high, divergent high, divergent high, divergent high. So I would look, I think this one's likely going to break to the downside. You've got some support right there, so that you can see that was former resistance. And then it was support, support, support. If you get a breakdown of that level, which is about 454, then down it's going to go. Probably down to this level right here. Which is 369. And that would be a drop of about 18.5%. SMH, that's the semis. Yeah, I don't know on this one. I mean, we could extend our trend line. Like, it's not a clean trend line. We don't have a whole lot of reactions on it. You know, maybe we broke trend right there. Back test, you know, and kind of drifting sideways, making another trend line. So what I would do for right now is probably just watch this trend right there, and a break to the downside of that would be your next sell signal. Clean negative divergence has been building for quite some time, and that's consistent with the market. We have a really big negative divergence that's been extending for months, and that happens, you know. And that's consistent with a major correction coming in the near future. So we're just waiting for it, waiting for the sell signals, waiting for the opportunity to jump on that correction trade. Because I think that's the opportunity. I think that's where most of the money is going to be made in the near term. There's grinding bullish action right now where we're just grinding higher, and that's like picking up nickels in front of the steamroller. Yeah, you're making money, but I think the big money is going to be made on a correction move when these negative divergences play out. It's very similar if you go back to right before the COVID crash. So here's the thing. Here's right before the COVID crash. And most people were extremely bullish, you know, all through here, grinding higher from October timeframe till about February. So many months. This is picking up nickels in front of the steamroller. There's your nickels, and then boom, huge crash. And that's what it looks like we're setting up for right now. Maybe we don't get a big crash, but I think a correction, probably a 20% drop. So the way I'm positioning is rather than try to game, because I don't know when the break is going to come. So rather than try to guess when we're going to break, I'd rather just wait for the break and then catch the move to the downside. One thing is so I shorted this COVID crash, and if you look at it, all the people that were long, this COVID crash on the S&P 500 wiped out all the gains from 2016 till about 2020. So about 4 years worth of gains were wiped out in about 6 weeks or so. So, I'm not saying we're going to get a huge plunge, but again, this is complacency, that kind of slow grind higher right before what looks like to be a correction coming. And we had negative divergence back then as well. That was pretty extended. So see the negative divergence that I have on that right in here, and that's what it looked like in the past. So big negative divergence, probably setting us up for a bear market, a full-on bear market. Maybe the Fed will step in, and we'll have to watch that. But the Fed's running out of tools. They don't really have interest rates, and if they want to just create massive inflation, then that's the tool that they're going to have. So we'll watch the gold miners for that play. Okay. Yeah, I think the commodities, the ag commodities, are going to go through a correction. So here's corn. See the uptrend line on corn right there? I know my chart's a mess, but the bottom line is I'm watching this uptrend line, and you can see we just had a sell signal on Friday right there. So I think corn's heading down to 19.19, and then potentially down here 17.45. So I think we're going to go through a correction in these commodities, and I'd be looking to go long down at some support levels for these ag commodities because they look like they've started a new bull market. Here's your bear market, and looks like we've started a brand new bull market. So that's what I'm looking for, but likely a correction coming in these things. Okay. GMIA. Yeah, so you had negative divergence. Back to, bear market. This one just is downtrending. I don't see any change in posture on that. You've got some support. Well, obviously I think there's some support right there. We hit that level in the past. We're at it again, though. I don't know. I think more downside, if I had to guess, with counter trend rallies along the way. All right. Okay, what else you guys got? I set stops above support and resistance levels. I don't always point them out, but I talk about that in my technical analysis course. Stop losses. I am still short SEAS, which is Seaworld. I don't see any reason to not be short this thing. Bigger picture, big long uptrend right there. Divergent high here. Break of trend. Counter trend rally, and likely resuming the downtrend. So in the coming months, I think we're going to look something like this. Probably have a bounce, you know, like that. I don't know where it'll go to, but I've got some targets laid out for taking profit at. I think down here is probably my final target on this one, which is about 36.80. And that's another 25% to the downside. So yeah, I'm still short. And for anybody that's wondering where I'd stop out at, well, you know, I'd probably stop out on a recovery way up here. All right. If we can recover that trend line way up here, then that's where I'd want to stop out at. And I know that's a long ways up. You know, that would be a move all the way of about 22%. So again, you have to determine for yourself where you want to stop out at. The risk reward ratio wouldn't be that great if you let that go to 22% stop loss. Especially if you took the trade right here, you had a potential gain of about 20%. You might only want to give it a 10% loss. It just depends on your risk tolerance. The pattern still looks good. The technicals still look good for more downside. I think that 36.98 is a good target right now. Okay, just kind of scanning the comments. Starbucks. Yep, I like that one. Okay, so the short was really right here or on the break. You know, I shorted it up here because it to me just looked like a bull trap or a clean area to short at, but then it broke down and we had an island cluster top reversal. So straight down ever since. And again, I talked about Starbucks for a while, saying, you know, looked like a good short. And, you know, that's 8% almost to the downside. I think we're going lower. Right here is my target area. And that's anywhere from 93.50 down to 91.30. So likely what will happen is we're going to head here. We'll bounce. We'll break, head down, we'll bounce, chop around maybe, and then break, and then, you know, that'll be it. So I'm going to take profit, right? You know, a little bit of profit down here, and I'll take some more profit down there. What I do is I take profit at support, and then I add back to the short as we bounce into resistance. But I would completely close out the trade and be done with it if it was down here. Okay, target TGT. I did not take this trade because I didn't like the break right before earnings. If it wants to run up and do a back test like this, I'm going to short it right up there. So yeah, but I do think this one's heading lower, and you got negative divergence there. I'm looking at this as kind of the target, which is 202.08. So 20% or so on that one to the downside, maybe more. Copper looks like it's heading lower. The Feds can go negative on rates, and I think there's a good possibility they do that. I'm not so sure, but Yes, they can go negative. I think the Fed wants to pump more money, but they're not going to just start pumping money after an extended uptrend. So maybe we get a correction in the markets and then the Feds pump more money. They try to manage things. So if markets get too overheated, they try to set things up for a pullback and then they step in after the pullback. All right, Carvana. So we have a new divergent high right here. Yeah, so I'm looking for a break of this trend line right here. It's right about, looks like we actually broke. It's just not impulsive yet. So to give this one the benefit of the doubt, let's draw this horizontal trend line right there and say a break below 339.80, an hourly close below 339.80, and I think it's game on for the downside. And the downside on this one is probably this trend line right there. So move down to there, which is about 230. That would be a break of 30%, somewhere right in there. So I think it is probably going to be a good short, but again, I'm going to wait for an hourly close below 339, 40 area. Cool. Yeah, TGT, I think the way to trade that is going to be on the short side, but you could have a counter trend bounce in the near term. Nucor. So we broke the uptrend. It did have a pretty impulsive counter trend bounce right there. But it also didn't hit the trend line resistance. It is an extension of the negative divergence. It's already confirmed. What I'd be looking for on this for the next leg lower would be a break of this trend line right here on the hourly chart, which is look for an hourly impulsive candle and an hourly close below this trend line on the hourly chart, which is right now about 114.44. So maybe we come down, we bounce, then we break. And if you get that break, I think that's your next sell signal for a good move to the downside. Yeah, maybe even down to this 75 area as the final target. Okay, well, I think that's about all I have, guys. Leave me a thumbs up. I'm going to wrap up. I've been going for almost an hour now. And we'll just see how things pan out next week. Leave any comments of stocks that I didn't cover today, and I'll try to get to those. So leave a comment, and I'll look at those throughout the week. Appreciate it, guys. And everyone have a great weekend. Bye.